Hey, welcome back to my channel. If you're new here, my name is Cherese. I'm a realtor with Samson Properties in Richmond, Virginia. And I am joined today by loan officer Liz Cope.
Hello.
Hey, in this video, we're going to be talking about a very important topic. And Liz, I think this is a hot topic right now. We're going to be talking about adjustable rate mortgages, ARMs, versus a 2-1 buy down.
Mm-hmm.
So Liz, thank you for joining me again. Thank you for
Of
blessing my
course.
channel. I appreciate it. So this is definitely a hot topic right now because of the fact that, of course, it's out in the national news about the interest rates right now,
Right.
that they're higher than last year, of course. And also, too, we have a lot of builders who are advertising a 2-1 buy down.
Mm-hmm. Mm-hmm.
So just for today, to make it clear, I was hoping that you could help us just kind of get the differences between the two, and maybe like if you feel like there's like some positives and negatives, or what type of buyer are these for, or anything like
Right.
that. We was hoping that you could kind of help us clear that up.
Yeah, no, that is a great question. The topic is a super hot one right now. First thing I'll say is that I offer both. I can do a 2-1 buy down, or I can put you in an ARM. And the differences are, it's all about, like you said, what type of buyer you are and what your financial plans are for the future. So let me start with a 2-1 buy down. 2-1 buy down in a nutshell means, hey, my rate is 6.5. Builder's going to do a 2-1 buy down, or seller's going to do a 2-1 buy down. First year, my rate's 4.5. Second year, my rate is 5.5. Then third year, my rate would go up to the 6.5. Now, something about the buy down, you cannot buy it yourself. Your realtor can't buy it. Your lender can't buy it. It is only bought by the seller or the builder, and they have to pay for that cost. So a lot of times, if you want a 2-1 buy down, you can ask your realtor, Cherese, or your builder to, if they're not advertising that they're doing a 2-1 buy down. Cherese could ask the seller to raise the purchase price of the home to cover the cost of a 2-1 buy down, so the seller's paying for it. Or the builder could raise, if they're not advertising that they're doing 2-1 buy downs, they could raise the price of their home to accommodate for the 2-1 buy down. So they're paying for it up front, but you're financing it on the back end.
Mm-hmm.
So that's a way to get a 2-1 buy down if your seller or your builder is not advertising that they are doing that. So
is that hard to get sometimes?
Not really. I mean, most of the
Yeah.
time, it's almost like raising the cost of a house to get closing costs for your buyer.
Mm-hmm.
You know what I mean?
Yeah.
It's like that. It's normally, if they're not advertising that they are running a 2-1 buy down, normally they're fine raising the cost of their house to let you finance in the 2-1 buy down. So the positives about the 2-1 buy down are: first year, rates lower. Second year, rate gets a little higher, and third year, rate goes up to that note rate. Now, the thought behind the 2-1 buy down right now is hopefully you'll be able to refinance before that rate goes up to that note rate. If you can't, that's fine, but you're going to be back to that 6.5 on year 3. Okay.
Mm-hmm.
And it's a gamble, right? I mean, do I think people are going to be able to refinance by the next 2 years? I do. I think that we're going to probably have a huge refinance boom in the next 12 to 18 months. So all the people that are in 2-1 buy downs right now, listen to what I'm telling you. When it's time to refinance, you need to do your refinance. And I'm hoping it's going to be about 12 to 18 months. But what if you can't refinance in 12 to 18 months? Well, you're stuck back up at that rate on year 3 that you didn't want in the first place. So this is the buyer profile that I think a 2-1 buy down works well for, is if someone right now in the short term let's say they're paying for their kids' college, or they
Mhm.
have, they just went, they got their Range Rover, and their Range Rover is a high car payment, and that
Right.
car won't be paid off for the next 2 years. So they want that
Mhm.
mortgage payment as low as possible. And then in 2 years, the Range is paid off. The kid's
Right.
out of college, whatever it
Mhm.
is, the credit card debt that you're on a 2-year plan to pay off is done. Whatever it
Mhm.
is, they've got income freed up by year 3 to be able to
Okay.
handle it. Or maybe they know that every year they're on track to get a certain amount of a raise. Okay,
Okay.
well then that would be another person that would really benefit from a 2-1 buy down. But
That's a good point. Okay.
if you are not in that situation to where you have knowledge that you're going to have income freed up to be able to handle that higher payment on year 3 in case you can't refinance, the 2-1 buy down is not for you. I mean, it's
Okay.
just not, because then you're stuck with a payment that you hated from the beginning. You're pissed because you weren't able to refinance, the market didn't change fast enough, or you didn't qualify to refinance, or whatever it is, and now you're
Mhm.
stuck. You're on Stuck Street.
Right.
So if you have
What would be a reason where you couldn't refinance?
So your credit goes down. You go upside down in the house, so then you can't do a
Mhm.
refinance. You're late on mortgage payments, which obviously
Mhm.
would make your credit go down.
Right.
You change jobs, and your new job isn't enough
Mhm. Okay.
to carry everything.
Mhm.
So those are reasons why you couldn't refinance. And then of course you want the market to be right for you to refinance. So like I said, I think it's going to be 12 to 18 months, but if it's
Mhm.
longer than that, let's say it's 4 or 5 years before you can refinance, well then at year 3, you've got that higher payment with the buy down. So really,
Mhm.
I look at a buy down, a 2-1 buy down, as a Band-Aid. You're putting a
Okay.
Band-Aid on the situation for year 1. Year 2, you're starting to peel it back a little bit. You got that
Mhm.
slow peeling the Band-Aid off so it don't burn
Yeah,
so much.
right,
Year
right.
3, that
Uh-huh.
mug is ripped off. So
Okay.
you got to be ready for that. You got to
Mhm.
know that if for some reason year 3 comes along and you have to be in that higher rate, that you're good to handle it.
Okay. That makes a
Yeah.
lot of sense. I like the Band-Aid analogy too. I love that. So as far as the buyer who the adjustable rate mortgage, because we've talked about this before, and
Mm-hmm.
unfortunately, a lot of realtors and a lot of lenders will not recommend an adjustable rate mortgage. For me, I give my clients their options, and then they figure it out as to like what's
Right.
going to work best for them, and then they decide what's the best program for them.
Mm-hmm.
So as far as like your adjustable rate mortgage, what type of buyer would that be best for, or what situation would
Yep.
that be best for?
Well, first, it kills me because you're right. A lot of realtors and builders will scare people from ARMs. And the thing is that in the right market, ARMs are your friend. And every realtor watching this, builder watching this, you got to
Mhm.
give your clients all their options.
Yes.
And let me tell you,
Mhm.
you might be losing business by not giving them all their options. Because if you scare them into thinking a 30-year fix is the only way to go, and someone's quoting them a 7% on a 30-year fix, that buyer might turn around back to you and say, yeah, I'm going to wait. And guess what?
Mhm.
That buyer is not, you're not making that sale anytime in
Yeah.
the near future, let me tell you.
Mhm.
So
Yeah.
it kills me that there's this fear about ARMs. ARMs are not what they were in 2008, 2009. We're
Mhm.
not doing ARMs with big balloon payments at the end. We're not doing ARMs for people who aren't qualified for ARMs. So, I mean, there's a big difference between '08, '09 and today. Um,
Mhm.
the buyer for the ARM, and this is what I recommend. I've got, and I have 2-1 buy downs as well, but with the ARM, I've got a 10-year, a 7-year, and a 5-year ARM. Okay. I really recommend either a 10 or 7-year ARM. The 5-year
Mhm.
ARM cutting a little close for me. But
Okay.
I really think the 7 and the 10-year ARM are the way to go. It's going to give you a lower rate. So my rates
Mhm.
for 7 and 10-year ARMs right now are, you know, in the fives, right? So it's going to give you a lower rate. And you've got on the 10-year ARM, you've got a whole decade before that rate starts adjusting, right? So you've got a
Yeah.
whole decade to refinance. On the 7-year ARM, you've got 7 years to refinance into a fixed rate or sell. And we
Mhm.
know, Cherese, you and I know, 80% of people between year 5 and year 7, they sell or refinance.
Yes.
So there you go.
Mhm.
I
Yeah.
mean, I think personally the ARM is the way to go. Now let me
Mhm.
blow your mind for just 1 second.
Okay.
You know what you can do?
What's that?
You can actually do a 2-1 buy down on my ARMs.
Really? All
Yes.
right. That's
So,
awesome.
so
Okay.
if my ARM rate, let's just say, don't quote me anybody, I'm just
No,
throwing
we're
this
not
up
going
in
to
the
quote
air.
you. We're not going to
Right.
quote you. Hold
But
you
let's
to
say
it.
the
Okay.
ARM rate is 5,625.
Okay.
Okay. Then if you had a 2-1 buy down on that ARM, the first year would be 3,625. Mic drop. Second year would be 4,625, and then you'd go up to the 5,625.
Oh my gosh. This
Right.
is such a game changer.
Right. So who said you couldn't get a rate in the threes?
Oh my gosh.
Said
Okay.
it.
This is so helpful. I mean, this is
Right.
really great to know. Do you
Yeah.
think people don't know this stuff?
Well, people honestly they don't
They
a lot
don't.
of people don't know
It's up to
this.
us to be
We've got
that
to educate.
educator.
Yeah, I was gonna say it's not like being advertised in the sky. Like we got to educate
Right.
buyers. We got to help people
Yeah.
do this. So again, with that 2-1 buy down, we got to make sure you're cool if you can't refinance by year 3. You're cool with that 5,625 payment, right?
Right. Yeah.
But
Mhm.
I'd rather have my payment go from 3 to 4 to 5 than from 4 to 5 to 6 or 5 to 6 to
Yeah.
7. Like,
Right. Yeah.
you know what I mean?
Definitely. Any day.
Right.
Yeah. Wow. This is great information. Buyers need to hear this. We're going to get the
Yeah.
word out. If anyone has any questions, Liz, where can they find you? How can they find you?
Give me a call, 434-466-3289, and I can help you. Or you can hit me up on the gram. My IG handle is Life of Liz Cope.
Okay. Well, you know what? We keep it short here on my channel, Living in Richmond, VA with Cherese. If you like these sort of short to the point, but with great information, give us a like, share, and make sure you hit that notification bell so you can be notified every time I drop a video. Thanks again, Liz. I appreciate it.
Thanks,
All
Cherese.
right. Have a good one.